Hi everyone, it's Mark. Welcome back to my channel. Today I'm going to talk about escrow accounts, what they are, the pluses, minuses, so you can decide if they're right for you, and hopefully you can either save a little money, take better control of your finances, or at the very least get rid of any possibility of having to pay late fees or penalties. I am so pumped to share this with you. Thank you so much for joining me. But first, if you could go ahead and help me with that YouTube algorithm and smash that like button. When you buy a home, your payment is typically broken down into either 4 or 3 parts, depending on how you want to look at it. And it's typically talked about in financial guru terms as PITI. The PI is principal and interest. That's your actual loan. The principal is what you pay back to the lender, so you pay down the mortgage, so that at the end of the term, either 15 years or 30 years typically, you owe 0. Every month it pays down the amount you owe the lender a little bit. The I is the interest. That's what you pay the lender so that they give you the big money up front. PI, principal and interest, that goes to your lender. TI is taxes and insurance. Those are typically not paid to your lender. Those are paid to third parties. Taxes either to your county treasurer so that they can use the money for schools or roads or things like that. And insurance goes to your insurer for hazard insurance, so if there's a flood or a tornado or a hurricane and the house comes down, then they will pay to rebuild it. Your lender likes that because they don't want to have just dirt as the collateral in case you don't pay back the loan. So typically, escrow accounts are for your taxes and insurance. You can either pay the taxes and insurance yourself, or you can set up an escrow account and then your lender collects a little bit more each month. So you actually don't pay the taxes and insurance yourself, your lender pays them out for you. Now, I've only ever heard of an escrow account that collects for taxes and insurance, but I was talking to my brother-in-law a little while ago because he's refinancing, and he actually only pays taxes into his escrow account. The insurance he pays himself, but the lender collects the taxes. I've never heard of that, and I don't know why. Maybe it's because the taxes are typically a lot more than the insurance, 2 to 3 times. So people don't feel as comfortable paying those as they do the insurance, which is less and only paid once a year. If you don't have an escrow account, then you pay your lender once a month. You pay the principal and interest, the P&I, and then typically twice a year you'll pay the taxes to the county, and once a year you'll pay the insurance to your insurance company or your insurance agent. With an escrow account, it's a little bit different. You pay a little bit more to the lender every month, typically 1/12 of your insurance and 1/12 of your property taxes, along with your principal and interest. And then twice a year, they will pay your taxes and they will pay your insurance. Now, if you have less than 80% loan to value, so if you put less than 20% down on your home, escrow accounts are often required by the lender because they want to make sure that the insurance and the taxes get paid. If you put more than 20% down, or you reach a point where you've paid enough that you owe less than 80% of what the property is worth, then you can get rid of your escrow account and you pay the taxes and insurance yourself. In the past, the lenders would give you a benefit monetarily. They'd pay you to get an escrow account. In the past, it was somewhere between a 1/4 point or a 1/2 point off your interest rate. So if your interest rate was, let's say, 6% and you got an escrow account with them, they would drop it to 5.5 or 5 3/4. But with interest rates so low now, they can't really afford to do that. Also, there's so much competition among lenders that they can't afford to give that much up. So what they're doing now is there is a little bit of a benefit if you take an escrow account. For my brother-in-law, again, he was just refinancing, and for him it was 1/8 of a point up front. So in other words, it's like $250 one time. The lenders can't afford to give you a half a point over the entire 15 or 30-year loans. They give you $250, which to me, on a $200,000 loan, is effectively nothing. Okay, so what do I feel about escrow accounts? Well, one reason I don't like them is that you pay the lender every month part of your taxes and your insurance. And that builds up in an account that they keep that pays no interest. And they only pay out of it twice a year for taxes and once a year for insurance. The rest of the time is just building up. So you're giving them an interest-free loan. I like giving people an interest-free loan even less than I love getting one myself. But there's actually something even worse than just this interest-free loan, and it's what's called an overage. The lender is actually allowed to collect a little bit more each month than what they think they're going to have to pay out for your taxes and insurance. Why are they allowed to do that? Well, it's because they don't know for sure what your taxes and insurance will be. If you have a fixed rate loan, they know what your principal and interest will be, the PI part. That never changes. But your taxes and insurance can change. And typically, they'll go up a little bit every year. So all the lender can do is base your current payment for taxes and insurance into your escrow account on what you paid last year, which may or may not be right. It's probably a little bit short, but they don't want to be short when the taxes or insurance comes due, because then they'll have to come out of pocket. So they're allowed to collect a little bit more. And then at the end of the year, they will do what's called an escrow evaluation. They'll look at how much is in your escrow account, how much they thought they were going to pay out, and how much they actually did pay out. They're only allowed to keep a certain amount in the escrow account. And if they have too much in the escrow account at the end of the year, they will write you a check. If they don't have enough, then they'll increase your payment. So that not only is it an interest-free loan for the taxes and insurance, but it's also an interest-free loan for the overage. So it's an interest-free loan to your lender for more than what you're going to pay for the taxes and insurance. Okay, so is everything bad about an escrow account? Not necessarily. It depends on you. The one good thing is that it is a forced savings account, basically, that makes sure that your taxes and insurance get paid, so you will never have to scramble for money twice a year when the property taxes are due, and you won't face penalties if you pay late. If the payment gets paid late by your lender at an escrow account, they pay, not you. You pay the lender a little bit every month, and you know how much that's going to be. You're not having to save in an account for a big tax payment twice a year. So if you're the kind of person who can't budget and save for a fairly large tax payment twice a year, then it can be a good thing, because you know that the taxes will get paid. I was talking to my sister-in-law who was in the refinance with my brother-in-law, and that was her argument. And I said, yeah, you're right. If you can't save, if you're worried about not being able to pay the taxes when they're due, this is a good thing. It does make sense in that case. Then my brother-in-law piped in and said, we don't have to worry about that, because if we're ever short, we'll just go to Mark and get a loan. So I guess if you don't have a brother-in-law who will bail you out and you can't save and set aside the money for taxes, then an escrow account may make sense. So with all this information, what's my bottom line on escrow accounts? I don't really like them. I don't use them whenever I have a choice. I like having control over my money on a monthly basis. I feel that I'm able to save, and I've never had a problem making the tax payments. I've never scrambled for the money. I've always been able to set it aside and make the payment. And as I said, I don't like giving interest-free loans to anyone, especially not my lender. So I don't use them unless a loan requires them. I do have a couple that when I took cash out, they required me to have an escrow account, and so I do have them there, but that's it. That's what I think about escrow accounts. I hope you found this information useful. If you've made it this far in the video, I would appreciate it if you'd go ahead and engage with me. Leave a comment down below or a question. I do read all the comments. And if you haven't already done so, then please go ahead and subscribe, and I'll see you next time. Thanks.